All right, so inflation has finally been smashed. As hard as Elon Musk's net worth has, inflation was slain as much as SBF was, and inflation has been smashed as hard as you smashed the like button. All right, so a lot has happened this week. First, on Tuesday, been binge watching the Harry and Meghan documentary on Netflix. On Tuesday this week, we got the CPI, the Consumer Price Index, which is how economists like to measure inflation. And that number is finally consistently coming down. After hitting a high of roughly 9.1% in June this year, we've been coming down, and last month for November, it was 7.1%. Now just remember that Papa Pal's goal is to get this 7.1% CPI number down to 2, maybe 3%. So we're still nowhere near the Fed's target rate, but at least we're coming down, even though it's a bit slow. Now also this week, we got the super secret FOMC meeting where the Illuminati, aka the lizard people, I'm kidding, please don't hurt me, where the central bank chair people get together to decide the future of what's called the federal funds rate, the interest rate for banks to borrow money from each other. And surprise, surprise, the interest rate went up by exactly how much the market predicted they would, by 0.5%. But also this week, we got Sam Bankman-Fried, the former CEO of FTX, who was arrested and charged with fraud and embezzlement. And after that happened, Bitcoin's price actually went up, which makes perfect sense. But there's also still a huge risk for Bitcoin and crypto ahead. So in today's video, I want to catch you up to speed as far as what happened this week. So let's get into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the LE5 really short video. So first, let me explain the really boring stuff in terms of how much inflation went up and how interest rates were affected by this, because it's all connected together. And then we'll talk about the exciting stuff in crypto. So first, inflation, which of course is the measure of how things are climbing in value, is measured in one of two ways: the CPI and core inflation. Core inflation, remember, just removes food and energy out of its measure. So for the core inflation number, it went up 0.2% for November. And remember, November is the latest data that we have, and 6% for the whole year, which is actually lower than what economists predicted, because economists expected 0.3% for November and 6.1% for the year. So overall, it means that prices are climbing a little bit slower than what economists thought, which is overall a good thing. Now, the other way to measure inflation is the CPI, the Consumer Price Index, and that number went up 7.1%, which is also lower than what was expected. That's why the Fed, aka Papa Pal, increased interest rates by 0.5% instead of 0.75% like some people expected. Now, this also means that credit card rates, student loans, auto loans, mortgages, generally the cost to borrow money is going to be more expensive. But the upside is that interest rates on savings accounts are also going to pay us a little bit more. And the stock market, including the Dow Jones, the Nasdaq, and the S&P 500 went up a little bit as well. And the theory behind why that is because stock markets really like lower interest rates. And also, this was the last interest rate increase for the whole year. Yay! So that's all the boring stuff you need to know about. Now let's talk about the exciting stuff that happened in crypto this week, because it's pretty crazy. Sam Bankman-Fried has been finally arrested on Monday of this week, and he was charged on 8 criminal counts. The grand jury charged him with securities fraud, wire fraud, and money laundering. In fact, if he's proven guilty on all of those charges, he faces up to 115 years worth in prison. Now, I'm not a criminal attorney, so I couldn't tell you when this sentencing will begin or how many of those years will be served, but one of the questions that I personally had is, what's going to happen to Alameda Research's co-founders, Nishad Singh and Gary Wang, because they were both able to borrow $554 million and $224.7 million respectively. Because now that FTX and assuming Alameda Research is no more, who do they owe their money to, and do they owe any money at all?
What is this? Where's all the money?
That's as good as money, sir. Those are IOUs.
Here's really where everything went wrong. The Securities and Exchange Commission charged Sam Bankman-Fried with fraudulently hiding the link between FTX, the exchange, and Alameda Research, the hedge fund. Now, if you remember, Alameda Research is just another company that Sam Bankman-Fried controlled, and it was sort of like the rocket fuel that funded his other companies. And remember, the way Alameda Research made its money at first was through something called price arbitrage, where you could buy Bitcoin off of one exchange for $1,000 and send it to another exchange where you could sell it for $1,001. This is a strategy that I thought about doing way back in 2017 when there were big price differences on different exchanges. But back then, I had to wait several months before I was approved on different exchanges. There were account and withdrawal and deposit limits. You needed a ton of time and a ton of money. And because I didn't have any of that, I never really tried it. But Sam figured out a way to scale this strategy, and that's how he made millions with this. Now, obviously, it helps if you already start with millions of dollars. But I don't think you can make billions using this arbitrage strategy, which is why they pivoted to a much more profitable plan, which involved promoting and creating their own token called FTT. So here's the blueprint on how they essentially printed an infinite amount of magic money, which, just like this stack of cash, is not real. So step 1, they created their own token. Step 2, they released a very limited supply of it to the open market. Step 3, they got high off their own supply by buying as much of their own asset as possible. Step 4, they made a profit from artificially boosting the value of their own asset. And step 5, for extra credit, they made a secret software change that allowed Alameda Research to borrow as much money as they wanted from FTX, the exchange, which turned out to be customer deposits. And that's how they were able to show a massive balance sheet to get very real advertisers, to get very real investors to buy very real companies with. They also used that money to invest in $256 million worth of luxury real estate in the Bahamas. They enjoyed a very comfortable lifestyle while virtue signaling to everyone that they weren't in it for the money because they drove a Corolla and they were planning to donate all of it. A lot of stuff upsets me, but one of the things that really shocked me that I found out recently is that on November 9th, the day after FTX froze all withdrawals, and the day that Binance told us that they would not rescue FTX, Sam reached out to the Attorney General of the Bahamas and offered him a private deal in secret. He offered all the citizens of the Bahamas to withdraw their assets out of FTX, but only the citizens of the Bahamas. And shortly after, for 25 and a half hours straight, over $150 million was withdrawn by over 1,500 people. I'm not sure how that was allowed, and I hope that the justice system can get to the bottom of it. But on a lighter side of things, at least Congress now knows how to pronounce Dogecoin.
But I have 10 Dogecoin. Is it Doggy Coin or Dogecoin?
How clueless. Everybody knows it's Dogcoin. Crazier still though, it was found out that FTX, which was a multi-billion-dollar company, used QuickBooks to do its bookkeeping.
They use QuickBooks. A multi-billion-dollar company using QuickBooks.
QuickBooks?
On the bright side of things, I guess QuickBooks now has a new slogan, because QuickBooks, while it may not be the tool for billion-dollar frauds, it can be the exact tool for you. On a serious note though, even though Bitcoin is slightly recovering, there's a couple things I'm really trying to be careful of, and here's what they are. There's a couple other black swan events that could still happen. And the first of these is the collapse, potentially, of Binance, the world's largest exchange. Now, after the collapse of FTX, in a very short amount of time, roughly $3 billion worth of customer assets have been taken offline. That is a ton of money. In fact, it was so much money that Binance had to pause withdrawals for USDC, the second biggest stablecoin in the world, to shore up their own liquidity. That's alarming. Now, to be fair to Binance, they do have roughly $60 billion worth of on-chain assets, so they are much more collateralized than FTX was, but the concern is, what are those assets worth if people stop believing in them? Binance and CZ have also told us they are not leveraged and that they didn't borrow money from anyone, but the problem with that statement is that it's really hard to prove because source, trust me bro, you'll just have to ask around. And that's obviously a cause for concern. Another concern though is that Binance also has their own tokens, which have the exact same mechanics that FTX had. And even though their own tokens might play a much smaller role on their balance sheet, the point is, it's still kind of the same thing and you should still be careful. The second possible black swan event though is Tether, which is an unlicensed, unregulated stablecoin that's been propping up a huge portion of the market. Now, we've always known this to be true, but the problem specifically right now is that if the value of Tether, or any stablecoin that's big, but mostly Tether, goes down because regulators use this FTX collapse as a means to regulate these stablecoins, And if people lose faith in the value of these stablecoins, then we could see a massive domino effect, which will hugely undermine people's confidence in crypto, and we could see another run on the bank. So that's another huge possible black swan event. Now, I'm not trying to be Mr. Doom and Gloom, and I'm not trying to scare anyone. All I'm saying is that there are very good reasons right now to be concerned and to not have your crypto on an exchange, because there's no point. There's no reason. Stay away from the drama. Keep it on cold storage. As always, I would love to hear your thoughts. Have a wonderful rest of your day. Smash the like button. Subscribe if you haven't already. Don't forget to grab your free stuff. Links are down below. And then go track your free stocks with the spreadsheet linked down below in my Patreon. Love you. Thank you so much for watching. I'll see you back here on Monday, Friday, sometimes Wednesday. See you soon. Bye-bye.